Now, a lot of first home buyers don't get stuck because they can't afford the property. They get stuck because they don't understand the process. Hi, I'm Marie. I'm a property funding advisor here at Trilogy Funding, and in this video, I'm going to be going through in detail the steps involved in the first home buyer journey. This includes saving your first dollar all the way to getting your keys and moving into your property. When it comes to buying your first home, the lenders don't just care about how much you saved, they also care about how you save it. You will hear a lot of numbers being thrown around, whether it be from banks or on the internet, that you need a 20% deposit to buy a house. But that is not the case, especially as a first home buyer. As a first home buyer, you want at least a minimum of a 5% deposit plus your purchase costs on top of that. So, for example, if you were to buy a property worth $500,000, $25,000 is 5%. Add about an additional 5-6% to cover all of the costs involved, like the lender application fees, valuation fees, settlement fees, things like that. In total, you will need roughly $30,000 saved to buy that $500,000 property. If you are a first home buyer and you do have a minimum of a 5% deposit, you may be eligible under the 5% deposit scheme, which prevents you from paying LMI and having to save for a 20% deposit. It gets you into your house a lot quicker, providing you purchase under the given cap for your state. And by that, I mean every state has their individual property price caps. So for example, in the ACT, it is $1 million. If you go over that, you are no longer eligible. And please just note, especially if you're applying under the scheme, this 5% deposit needs to be genuinely saved. Genuine savings is money that you can prove you have genuinely saved, which is usually over a minimum period of 3 consecutive months. Funds such as gifts with a declaration from your parents, inheritances, liquidated shares, as well as the first home super saver scheme all count as genuine savings. As well as the big key item here, obviously, putting money away from your salary consistently. Whereas funds like payouts from leaving or exiting a job, personal loans, the sale of assets, these do not count as genuine savings, and these funds must be sitting in your account for 3 months. Your pre-approval is the foundation of this journey, and everything else comes on top. Now, a pre-approval is a fully assessed application where the lender takes into account your income and affordability. Can you afford this home loan? Your debts and what you have to repay from that income, as well as your expenses. So what will be ongoing when you move into your property? Once the lenders have assessed this and they're happy, they will say, hey, this is the maximum you can purchase at. Go find a house, you have 90 days. The pre-approval that the lender issues you, treat this as your absolute maximum limit. So for example, the lender may pre-approve you to purchase a property at $1 million, but you might find a property for $950,000, $800,000. You can buy at the cap, 1 million, or anywhere below, just do not go above. A pre-approval is not a guarantee that the lender will lend you money, but it does give you the confidence that a lender is willing to approve your loan in principle. And I will explain exactly why a lender might not guarantee to lend you money for your pre-approval in the unconditional stage. Once the lender has issued you with your pre-approval, the timer now starts for you to shop around and find a property. Your pre-approval will guide you as to what your budget is and the absolute maximum offer you can make. You can either buy at this value, below, but not above. It's great to have a good idea of what type of purchase price you have in mind before you start looking for a property. When it comes to finding a property, you essentially have 2 different ways of making an offer. One is through a private treaty, or the second one is through an auction. A private treaty is negotiable and less risk. You will make an offer to the agent. They will then go back to the vendor and they will negotiate and correspond and come to a price, and they will then accept the best offer. The second option is an auction, where everything moves so much quicker. They are more competitive, and if you win, that property is yours and you exchange on that day. It eliminates the negotiation process completely. Just remember, as a first home buyer, you are not looking for your dream home, but you absolutely want something that is comfortable and that you are happy with in the meantime, or something that you would be happy to rent out at a later date if you're looking to expand your portfolio. When your offer is accepted, you are not locked in just yet, but this is when things really kick into motion and things get going. Once your offer has been accepted, we then start the process of obtaining your documents, such as your contract of sale, so we can then organize a lender valuation, which is vital because these two documents will determine whether or not the lender will take this as a security. Things that a lender will assess once they get that valuation back includes the value of the property and does it match what's on the contract of sale, how big is the property and what is the size of the land or the acreage that it's on. Is it too high? Is it too low? Market and economic conditions can also affect the security. Zoning, where it's zoned. So do you live in an area that's heavily affected by floods and bushfires? They consider that as well. And from these documents, they can also find other issues. So if the property has unapproved structures, if the property needs essential repairs, all of these things are listed on the valuation and are all assessed and considered when the lender issues you approval. This is also a great time to find a solicitor or conveyancer if you haven't already. A solicitor will handle all of the legal aspects involved in buying a house. And that involves the transfer and registration of mortgage, the preparation of the property contract in question, and they will also review your contract before you sign the dotted line, which is absolutely recommended. You also want to ensure that you have completed a building and pest inspection report on the property before you buy it to prevent you from buying any future problems that it has that you will need to pay for. It varies from state to state, however, in terms of who organizes the report. Formal approval is not the same as settlement. Some people may think, oh, you've got your formal approval, now's the time to relax, but this is not the case. A formal approval means that the lender has checked your income, your expenses, they've checked your new property contract and your valuation, and they're happy to go. Congratulations. This begins the process where the legal teams now start to take over. And when I say legal teams, I mean your solicitor, the bank solicitor, the seller's solicitor, and their bank solicitor. And this includes the issuing of your new home loan contracts. Your loan documents nowadays will be issued electronically and can be electronically signed. You will need to review these contracts carefully and ensure that you understand every component in these documents. Your broker or your bank should be holding your hand in this instance to make sure that you understand every single thing in these documents that you are signing, because there are a few bits and pieces that you will need to get your head around before you send the documents back. Once you're happy with these documents, we understand everything and we've signed it, the lender will then receive those documents and then the lender will then prepare for settlement. One thing you need to ensure you have ready to go before settlement is the insurance on your new incoming property. If you are purchasing a house, you will need to do your research in terms of building insurance providers and ensure that you get your property insured and they issue you with the certificate of currency, the building insurance policy. However, if you're purchasing under a strata, so a unit or a townhouse, for example, usually that insurance is covered by the strata and you will have that certificate in your contract of sale. You just need to make sure that it's valid. And then comes settlement day. So on the day of settlement, you will receive your keys. It is the day you officially move into your house. The funds are balanced and are dispersed to where they need to go. Your solicitor will advise you of the shortfall required at settlement, which is the remainder of your deposit, which We, as your brokers or your bank, will ensure that that money is sitting in an account ready to go for settlement. Ultimately, things do happen prior to settlement day. A lot of them we can't ascertain at the start of the process. So we need to be prepared for any unexpected surprises that may possibly delay the settlement. Common surprises that may jump out of nowhere before settlement include extra information being required from any of the parties involved, delays in settlement due to insurance policies being expired or not valid, unsigned, incompleted, or incorrectly signed loan documents, and in other rare cases, things like caveats or things being put on the title that will need to be removed prior to settlement. Ultimately, things can jump up before the settlement day that will cause delays. And we need to be ready and prepared for if and when that happens, especially as there are a lot of parties involved in settlement with a lot of moving parts all working simultaneously to meet a certain date to settle. Here are some common traps that first home buyers do fall into during the process or before the process. So the first one is buying without a pre-approval. Now, buying without a pre-approval can lead to very silly and expensive mistakes, especially if you have fallen in love with the property, you can't afford it, and you have made an offer on it. Try to think rationally in this scenario and not emotionally. Your pre-approval comes first. New debts, so car loans, novated leases, personal loans, zip pays, credit cards. These are a big no-no if you know in the short term you want to buy a house. So park those aside for a hot minute and buy your house first. Changing jobs. Now, a new job, especially if it's a new to industry job, can definitely delay the process. And more so if it happens to occur during the home loan application. Please mention any short-term objectives that you have to your broker or bank prior to the application to save you from being disappointed. Not asking questions. Now, it might be a cliche to say, but there is absolutely no such thing as a stupid question, only expensive assumptions. If you don't know exactly what you're getting into or signing, simply let us know. It's our job to make sure that you understand these things. Buying your first home is not about rushing. It's about doing things in the right order. If you want to start the process and find out just how much you can afford, please book in a free strategy session with us. The link is below, and it might just save you a lot of heartbreak in the future. If you're a first home buyer and you loved this video and you want to share this with your friends, please do, but make sure you subscribe.